11 lakh crore rupees of Indian retail wealth vanished in 24 hours. The Sensex plummeted 2,500 points, crashing through the 75,000 mark, while the Nifty barely held on to 23,000. The cause of this digital panic is entirely physical. Thousands of miles away, missiles are hitting residential blocks, drones are actively swarming infrastructure, and major oil refineries are burning. In India, 13 crore people with digital demat accounts are experiencing this carnage through smartphone notifications. They are sitting in offices, skipping their lunch, and refreshing their apps as their savings turn into red percentages. This reveals a strange detachment, an entire middle class that measures global devastation exclusively by the numbers on their trading screens. This disconnect is a direct result of a society that has substituted real-world awareness for the hypnotic, pulsing rhythm of a stock ticker. Traditional fixed deposits, once the bedrock of Indian savings, were branded as stagnant and uncool. The new mandate was to chase higher, riskier yields in the equity markets. In 2 years, over 7 lakh crore rupees drained from safe bank vaults and poured directly into the volatile stock market. This influx was sustained by a hypnotic promise, the Sensex hitting 1 lakh, convincing retail investors the market would permanently rise. Political leadership actively encouraged this speculation. Senior government figures gave explicit advice to the public to buy shares right before election results, signaling that the state itself guaranteed the market's growth. The stock market became a political scorecard. A rising graph was marketed as the final proof of a successful government, making financial profit the primary metric for national progress. This created a green line blindfold. As long as portfolios were growing, any news that didn't affect the stock price began to feel secondary or even irrelevant to the average investor. Because the market was the state's main proof of success, the public began to view systemic issues as mere noise. Reports of jailed journalists, the targeting of political opponents, or the compromising of investigative agencies were ignored because they didn't show up as a dip on the Sensex. This creates a dangerous trade-off. When civic duty is tied entirely to a portfolio, the public becomes easy to silence. Stability is valued over justice because justice can be volatile for the markets. Millions of people entered a transactional relationship with their own democracy, surrendering their political awareness in exchange for the promise of endless financial returns. But the state cannot guarantee the markets forever. When global reality finally intrudes, the glowing green trend line shatters, trapping the retail money that entered at the peak of the hype. Investors are discovering that while they ignored domestic politics, they cannot ignore global conflict. These physical missiles, thousands of miles away, have the power to instantly erase the valuation of a major company in Mumbai. The data shows the wreckage. 66% of large-cap stocks, those worth over 1,000 crores, have dropped by 30% from the highs, where retail investors were told to buy. It leads to a surreal thought experiment. If Donald Trump called every Indian investor and asked them to vote on ending the war to save their portfolios, how quickly would they abandon their geopolitical stances to save their savings? The same investors who ignored real-world violence for the sake of their returns are now watching those returns evaporate specifically because of that violence. The financial influencers and advisors who pushed the long-term narrative have suddenly gone quiet, offering no answers for the capital that has simply vanished. The 11 lakh crore rupees lost to this crash is only the immediate damage. The deeper cost is the democratic leverage, the rights and the collective voice that was surrendered during the years when everyone was only watching their screens. Now that the money is gone, investors have a reason to be angry and a reason to demand answers. But they are finding that the mechanisms for free speech and protest have already been dismantled while they were looking the other way. Outsourcing your worldview to a stock ticker leaves you completely defenseless. When the market falls and reality takes over, you are left voiceless and broke.